Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the scheduled events for the week of Monday, January 18th. Now, markets have been extremely volatile so far this year, but this week's indicators look set to take the action to a whole new level. Well, today is likely to be a quiet day with no major indicators out and U.S. markets closed. There's something big happening every other day. The highlights will be the Bank of Canada meeting on Wednesday and the ECB meeting on Thursday, plus there's a lot of key economic data coming out too. The focus at the beginning of the week will be on China, which starts things off on Tuesday with fourth quarter GDP, plus fixed asset investment, industrial production, and retail sales, all for December. Expectations are for growth to slow slightly to 6.8% from 6.9%, which is very convenient. It seems to me like a staged managed decline towards the recent official 2016 forecast of 6.8% growth. Later, Bank of England Governor Carney speaks at the London School of Economics. He is expected to renounce his previous assessment that the Monetary Policy Committee would begin to consider raising rates around the turn of the year, is what he said. Although the market long ago gave up on that idea, formally banning it could depress the pound. Also on Tuesday, we get the ZEW indices for Germany. And overnight, New Zealand announces its fourth quarter CPI. An expected decline in New Zealand inflation could heighten expectations of an RBNZ rate cut and depress the New Zealand dollar. Wednesday, the focus during European time will again be on the UK, where average earnings and employment data will be announced. Earnings growth is expected to have dipped further in December. That could prove negative for the pound. From the U.S., we get some important housing data, housing starts, and the more forward-looking building permits for December, as well as the CPI for December. Now, CPI isn't the Fed's target, but it is, of course, the most widely recognized measure of inflation. The big thing Wednesday will be the Bank of Canada rate decision, as I mentioned before. Analysts are forecasting a 25 basis point cut. Although the weak currency has been pushing up the price of food, overall inflation is still well within the Bank of Canada's target range, and so it may well feel that it has room to cut to help an economy that's battered by the plunge in oil prices. That could prove negative for the Canadian dollar. On Thursday, the highlight will be the ECB rate decision. There, nobody expects any change in rates or in the quantitative easing program, and so the focus will be solidly on ECB President Draghi's comments afterwards. It now appears to me that for now they're in a wait-and-see mode. Without a major change in the data, the next trigger for a change could be the new staff projections for inflation and growth, which will be considered at the March meeting. From the U.S., we get the Philly Fed Manufacturing Index for January. Then on Friday, the first of the January PMIs are announced. These are the first major indicators for the new year, and as such should be closely watched. Until recently, the survey data has been stronger than the actual data, but it looks like this discrepancy may start to be rectified. German and Eurozone manufacturing PMIs are expected to decline slightly. That could prove negative for the euro, especially if the US PMI comes in a bit higher as expected. UK retail sales for December are expected to show a month-on-month decline, which could add to the slowing UK economy theme and depress sterling. Finally, the US releases existing home sales for December. This could prove positive for the dollar if it changes people's views on the US housing market. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.